Great. On time, guys. Good morning, good afternoon, and good evening to everyone who could make their presence in this amazing webinar. Hope you all are having a great day. Today, we have an opportunity to engage in a thought-provoking discussion. I, on behalf of AI Core Spot, welcome all our esteemed guest speakers, the moderator, and all the pretty faces that makes up our lovely audience. Let me initiate with a humble introduction of myself and the company. My name is Nitin Naveen, and I'll be your host for the day. I'm working as Vice President Innovation Strategy at AI Core Spot, and I bring with me experience of around a couple of decades in the consulting firms dealing in and around the emerging technologies. My colleagues Arvind and Naveen will be assisting me in keeping today's event lively. Also, they will be stepping in to resolve some technical glitches if it comes in between. So I'd like to extend my sincere thanks to them for their hard work and dedication in making this event a great success. This webinar is intended to deliver the new age technological advancements in the current industry with a seamless experience. Speaking about something about the company AI Core Spot, we started a couple of years back, supported by our knowledge and innovation partner InfoVision and technology partner, which is Digit7. AI Core Spot aims to function as a comprehensive knowledge hub, offering valuable information and perspectives on a wide range of cutting-edge technologies around Industry 4.0, which includes artificial intelligence, machine learning, deep learning, robotics, IoT, edge computing, 5G, analytics, drone, edge AI, digital twin, AR, VR, cloud, and so on. With the objective of offering an in-depth exploration of all the sectors that involve technology, we introduce a different theme every month, and we have been progressively gaining momentum. Our goal is to become the leading AI-driven community worldwide, where individuals with similar interests like you can contribute to mutual growth and success. We prioritize industry-backed webinars and hybrid events, ensuring that our knowledge base is built on credible data provided by esteemed industry leaders, subject matter experts, thought leaders, and our trusted partners. Further, we nurture the content through various mechanisms like digital blogs, videos, podcasts, and newsletters to shed light on the ever-evolving industry. So join us today for a one-of-a-kind webinar focused on how technology is revolutionizing payment processing. We'll cover a range of topics, including modern tech stack, mobile payment apps, contactless payment and beyond, fintech market related to Gen AI, and so on. Our expert panel will provide valuable insights and engage in a thought-provoking discussion that you might not want to miss. And just to let you know, there are lots more in store for the next months with a focus on a lot of great technologies like Gen AI, ML, blockchain, IoT, AR, VR, digital twins, metaverse, ChatGPT, quantum computing. May I take this opportunity to further request all of you to go to our website, which is aicorespot.io, for future updates. We'll be delighted if you could share your love for us via likes and shares on our social media handles. It will keep you all updated on everything what we propose to offer in the coming months. Now, before we get started with the discussion, here are a few highlights to set up the tone for the great learning and networking day. We would like to introduce our community partners for today. It includes great companies like Moody Analytics, InfoVision, Green Dot Corporation, Fiserv, and Opportun, who came together to make this webinar a success. We also want to give thanks to all our attendees who took the time to register and join us today. We know you have a lot on your plate. That means to us you are here to achieve your objectives and connect with one another. Ultimately, our goal as a platform is to give you valuable insights and build meaningful relationships. So if you walk away with just a few innovative ideas or connections, we'll consider it a job well done. So quickly, let me introduce the esteemed panel members. We have Brett, who is AVP Fintech Space at InfoVision. He's also the moderator for this panel discussion. Joining him today, there are 5 great leaders. Let me introduce one by one to you all guys. First panel member is Natarajan, Chief Business Officer handling banking, finance, and insurance at InfoVision. The second panel member is Richard, who is Director KYC Financial Crime at Moody's Analytics. Our third esteemed panel member is Abhijit, who is Chief Product Officer at Green Dot Corporation. Our fourth panel member is Sovdeep, who is Senior Director Product Embedded Fintech at Fiserv. And fifth panel member, who is Brian, who is Director of Security Engineering and Architecture at Opportun. So just one disclaimer before we start, which I add always to all our webinars. The views shared by all the speakers are their personal ones and it's not related to any other organization. So over to you, Brett, to begin this exciting panel discussion.
Nitin, thank you so much, and good morning to everyone. Let me also thank our panelists today. Thank you for your time and participation in today's panel. Also, let me thank the attendees for taking time out of their day to join what's going to be a great session here. For the attendees as well, if you've got questions, please go to the Q&A section and submit those. We'll get those worked in during the discussion today. We've got a great topic, the future of payments, and so we're looking forward to today's discussion, and let's jump right into it. So let me maybe start with you, Abhijit. Let's maybe talk a little bit about building or owning versus leveraging third parties. What is the value of potentially building or owning your own proprietary modern tech stack, including a cloud-based payment platform or processing strategies, versus maybe potentially leveraging third parties for that?
Thank you for that question, Brett. Now, this question may sound a little dated, but we've been talking about Azure, AWS now for almost a decade. And as many industries, they've started their digital transformation. This entire digital transformation journey has been put into limelight for the last 10 years. Payment services, payment industry is no exception. Many players within the payment ecosystem are leveraging cloud infrastructure to complete payment processing solutions. Um, Adopting cloud payment solutions now enables the payment industry to cope with substantial increase in payment volume. They'll be agile, they'll be scalable, and they will be able to manage the peaks that they see in their regular transaction flows. Every now and then you must have heard that, oh, there is a Taylor Swift concert and the entire system came crashing down. What is the reason? The reason is the infrastructure wasn't able to manage the peak volumes, and this is one of the problems, challenges in our industry. I categorize them into five different parts. Speed to market. Higher flexibility can mean that companies can deploy payment technologies much faster using their system. However, what we've seen is that integrating payments technologies on a legacy stack, be it server technology, is very, very long, very expensive. And you hear this in the payment systems industry often, that many times people give up. They'll be like, oh, this is too expensive, this has been going on for years, and I hear these examples all the time. But a cloud based system enables you to deploy any technology in a market within weeks. That is the advantage. Now, I'm not saying that transitioning to cloud is going to be easy, but cloud has these benefits. You are able to manage these peaks. The second most important part is flexibility and scalability. Critical advantage of using a cloud based system is it is flexible, easy to scale, and your business needs are evolving on a daily basis. You're able to manage them with a cloud-based technology, unlike traditional system where you have to add more server capacity. You have to worry about, oh, what is my throughput, what is my TPS. These things are better managed. In fact, in the industry, there is this term called four nines. Is your SLA four nines? A lot of it is dependent on cloud computing technology. You are only able to achieve these things by using cloud technology. The third most important thing is security. Now, today's customer, one of the biggest concern is security, and therefore compliance with something like a PCI DSS is critical for payment system. And I know PCI DSS is complex for a lot of businesses to achieve on their own. However, cloud-based systems is something that they can provide out of the box. Fourth thing to remember is data integration. Now, data integration is critical for maintaining a seamless, friction-free experience, transaction process for customers. Cloud-based technologies have all of these things available, and something as simple as an accounting or a management software can easily access data, and it's in a real-time fashion. And the fifth, the most critical of this, is low cost. Traditional infrastructure is expensive, really expensive, and cloud-based computing technology, with the more demand and competition, the prices have come down. That's why this is so important. So again, embracing cloud payment processing solutions is the new normal. And if you are looking for usability, accessibility, cost efficiency, convenience, security, automation, and multiple users, this is the way to go.
That's great. Appreciate the Taylor Swift reference. That was a good use of getting that worked in there. Appreciate it. What are you seeing? Do you think are companies trying to do a lot of this on their own? Are they doing a combination of on their own and leveraging third parties? What are your views there?
I've seen companies partner with parties that have been very successful in doing this. There are companies who've tried on their own, and I've heard more horror stories than good stories. Reality, I've been in this industry over 2 decades, and I've seen there are companies that have partnered with some very, very successful players. And those partnerships have worked and they've scaled with those players.
Very good. Good. Anyone have anything to add to that?
I just want to echo the sentiment that this change that you're talking about, it has amazing benefits in terms of providing better availability, better features, faster response. There's so many benefits here. I look at the world through a security lens, and it's really, really hard to embrace modern security needs on an old tech stack. And when we make the change that you're talking about, we actually open the door to lots of new ways of securing those platforms and doing it easier and faster. So the modernization you're describing affects so many aspects of how we provide services that it's hard to oversell what you're talking about.
Thank you, Brian. And Brian, maybe that's a good transition to somewhere I kind of want to go with you with regards to the traditional trade-offs of convenience versus security, and making mobile payments both convenient but secure for traditional banking. Maybe spend a few minutes kind of elaborating and going deeper in that area for us.
Well, I guess I already let the cat out of the bag here. It's hard to break out of that trade-off if we're going to stay with old ways of thinking and old ways of delivering services, because we get stuck in that old paradox, that old dilemma. And there are ways to break out of this. When I look at if we're talking about a payment app, and I look at modern apps and modern operating systems, and I just, for instance, look at the authentication layer of the problem, our ability to provide robust factors of authentication with very low friction is enhanced as we modernize the stack. And so, yeah, I can have you log in, probably have one laying around here, for example. Here's a little token that I use that not only transmits a FIDO token, but that FIDO token is protected with my fingerprint. And so logging in is touching, 2 factors, robust. There's so many opportunities available to us now because of advances in technology, but we have to embrace these changes in order to get that benefit. When we look at, I talked about authentication earlier. We could look at the API layer. We could look at just how well do we trust these sessions, and how well do we trust the devices that the remote user is connecting from. We now have the ability to detect whether they're on a real device or an emulator. We have the ability to quickly and easily get, recon information, signals about, is this coming from a known scammy source? Are there other aspects of this connection that might make it questionable, might not make it trustworthy? And when we wrap the modern tools and the modern capabilities that we get through these third parties that you referenced earlier, Brett, we're able to build a very rich risk picture that doesn't involve the customer doing a 5th form of authentication or doing some crazy outlandish thing. We can remove the friction. We can make it simpler. We can make it easier. Facial recognition. There's so many simple things that we can do to break out of that dilemma, that the dilemma really only exists in our heads anymore, Brett. I just don't think it's real anymore. We have so many tools available to us if we'll just embrace the partners, the tools, the capabilities that are available now.
No, that's great. Thank you, Brian.
I'll get off my soapbox now. You got me wound up with
it. That's great. No, very, very great perspective. And you're absolutely right, right? There's a way to make it convenient for the customer, but obviously secure and comfortable for the organizations that are responsible for for the payments and the vehicles, et cetera. And maybe that's a good opportunity to segue to you, Richard, and knowing your customer, right? And before payments are made, ensuring that the organization has all the required information and knowing their customer. Let's maybe dive a little bit on that side of the equation and get a little bit of perspective from that side as well.
Yeah, sure. Thanks for that. And Brian, I think this dovetails nicely into what you were saying, because KYC, or knowing your customer, right, and performing customer due diligence, is a regulation, right? So fintechs and banks have to do it, and banks now have more of ownership of that process, right, if they're funding a fintech. So that's some new guidance that came out recently that you should be aware of. I think when I think about authentication, right, it's sort of like the KYC piece is, you need to know who they are, right? Who are you doing business with? How do you think they're going to use your platform? And then also, I've seen a trend where are you really understanding who that customer is, but also, are they potentially a fraudster? Can you use some of that same data, right, to determine if they're going to use your platform to run scams? So you can be compliant with the regulations, but also add some value to your overall process to understand who these folks are and maybe what their intention might be. Because anytime there's a new platform, and you're always going to have people try to come in and misuse it. So I think there is a nice way to kind of start talking more about not only knowing who your customer is, but also how are they going to use your platform, and can you prevent bad actors from getting in during that process. So we know regulations are only increasing. There's more of them all the time. Regulators are hyper focused on fintechs and money flows, and making sure that people are not misusing our financial system. So I think that's really important. And I would also just say that when fintechs are kind of starting out and trying to understand how their platform is going to work, knowing those customer controls, putting those in place in the beginning is critical, because it's a lot easier to get it right in the beginning than later, when someone's trying to acquire you and they're like, well, what do you know about all these customers that you have? And the answer might be not much. And so that's gonna be not a great conversation, right, to have. So my view is, use KYC. You have to do it anyway, so try to use it in a way that's going to add value to your platform. And Brian, I'd be kind of curious from what you said on authentication. I mean, do you see connections between KYC and authentication in your process today? I think would be a good question.
So what was that question again? Do I see connections between KYC?
Yeah, I mean, when you're onboarding someone for a customer, are you seeing, like, you're talking about the security and authentication, but are you kind of combining those functions at Opportune, or do you see that as separate functions?
In my mind, there's a difference between authenticating, so somebody proving that they are the person who created this account with us. That's separate from the whole proofing step, where we try to prove who they are, and they try to establish through presenting the right documents and materials to establish that identity. Proofing is actually pretty darn important. We can't have trust in the later authentication if we haven't done a good step at that proofing layer. So yeah, I think proofing is crazy important.
I have a question for both you, Brian and Richard, and you decide who wants to answer this question. Now, in this new agent world where we are getting smarter with all these cloud computing, the unfortunate reality is fraudsters are getting smarter too. I'm pretty sure all of our data is somewhere else lying out there in the dark web. Now, knowing that all this data is stolen, I'm sure, Richard, you've heard the DMV data got stolen from so many states with the COVID and pandemic, with all these stimulus checks. There was the insane rise of fraud. How important does KYC really become then? And leading up to that, if KYC data is so readily available and impersonating account takeover, all of these things become so easy in the industry, how important does the other side of data point become? Device ID, your authentication via other methods.
Richard,
Yeah,
I defer to you.
sure. Yeah, I think it's crucial, right? So the KYC step, I view, as a regulated step, but you have to do it anyway. So the regulators say you have to do it, and not doing it means fines. OCC will fine you, OFAC will fine you, right? Like if you're doing business with sanctioned entities. So I think you have to do that. My position would be, as you have these other data sources like device IDs, understanding logs, like how the customer's logging, what kind of equipment they're using, you can connect that to that central profile, that identity you've established at the onboarding, and use that throughout the life cycle of the financial transaction. So in my mind, it's incredibly important. And I think you can also connect all these different data sources from various vendors to one place so that as your customer transacts, you truly understand who they are and how they're doing business. It's almost like every time you're authenticating them as you understand, who they are and how they're connecting.
I'd like to jump in and say that we don't want to let the fact that hackers are so creative and fraudsters are so industrious and willing to try. We don't want to use that to justify perhaps not fulfilling our KYC obligations. We have robust obligations there that we need to comply with. But like anything, offense is going to inform our defense. And when we get tricked, we don't want to be tricked that way again in the future. And we're going to constantly improve and constantly embrace new solutions and new creative ways. We got smart people. We find smarter and better ways to solve these problems, but it's because we actively address this issue. We look and see what's happening. We adjust our defenses accordingly. We try to identify in advance account takeover scenarios and how to defend against them, and then we update those and improve constantly. It's not a battle we're going to win if we quit along the way. We're just going to keep fighting, keep improving, and that's just business as usual for us right now with fraud.
Thank you, guys. Really helpful responses.
Yeah, great discussion. And Aberjeet, great question. I hope the attendees are enjoying this as much as I am. This is great back and forth and dialogue and good discussion and great insight from everyone. So appreciate that. Let's maybe shift gears a little bit and go to you, Natarajan, on contactless payments and talk a little bit about innovation and shaping the future.
Sure. Thanks, Brett. Good morning, everybody. So I want to, start with the evolution of the payments itself, right? So I may actually sound too old because I remember olden days, there used to be a physical machine where you put your debit card or credit card and, some paper around it, and then they swipe the thing on the top. It gets the impression of the credit card, and then, it used to get processed, right? So from there on, we actually went to swiping the credit card rather than the physical machine itself. And from swipe, we actually went to, the near touch or contactless, right? You just show the credit card closer because of the NFC, it can operate that way. And then we started with the biometric authentication with fingerprint or with facial. And then we evolved into more of P2P payments where, you use Venmo or PayPal or Cash App, where you don't even use your credit card physically, right? Or even, swipe anywhere. You just put in the email address or a phone number to the person that you want to pay. And through the app, the payment is almost instantaneous, right? At least the receiver gets a notification that their payment is on the way. And now further evolution from there on, I'm sure you guys would have heard that now we can pay with the palm, right? So Amazon has come up with the palm-based payment because the palm signature is unique to a person, right? The ridges and the lines and then the vein pattern within the palm itself. So, technically you don't even have to, pull out your wallet or credit card or even cell phones, right? You can actually pay with Samsung Pay, Google Pay, Apple Pay with your phone or your watch. But the next evolution is the palm-based payments that I see. But combined with that, right, if you look at the retail shopping, the cashierless store or the Amazon Go store, it's a combination of your identification or identity plus the payment together. So if you walk into a cashierless store, you can either authenticate with your palm or with your cell phone. So it identifies you. At that time, you're not paying, right? You can just walk in. It says, okay, Breadfish walked into the store. Then whatever you want, you pick in the store. You don't want, you put it back, and then you just walk out. And then the system automatically knows you and whatever you have purchased, and automatically takes the money out from your chosen payment method. All of that happens in the background. So technically you're not even paying anything at that point, right? You just walk in, you identify yourself, and then you walk out. And I've seen all of that actually taking great shape, especially because of COVID, right? Nobody wanted to accept cash payments or even touch the credit card. So that has actually accelerated a lot of the cashierless stores, especially with the traffic that we are seeing in the airports these days, or all the shopping malls. After the resurgence from the COVID pandemic lockdown, this is actually very, very easy, convenient, faster, and seamless, and also avoids fraud to an extent, right? Because you're not showing your credit card, or you're not exposing your credit card. So that, to me, I see is the evolution and the future, right? So you don't even need a credit card. You can pay with your biometrics, and also tied into your account, where they identify you, and you've chosen your profile based on the account, and then you can pay. And some of the countries outside of US, they are already using QR code payments, right? So you can just scan the QR code in your mobile app, and the receiver already gets the money, right? So that is something that is also catching on from a QR code payment standpoint. So those are the things that I think is the next step in the evolution of contactless payments.
Natarajan, I have a question for you. I know you've been in the industry
Sure.
for quite some time, and I always find this interesting. In America, there are so many modes to send money, right? You guys said Venmo, Zelle, PayPal, and you have RTP, and now Fed now.
Correct.
We'll see how
ACH, yeah.
long it takes now, and ACH, right? And then you see countries beyond America, where you see that the unification of payment systems has, they've gone leaps and bounds. For example, UPI in India,
Correct. Correct.
right? And with that, the adoption of QR code, and how that is taking traffic away from card-based payment, or even
Correct.
contactless payment.
Correct.
Why do you think this technology has not been adopted in America yet? Why do you think there are so many players, and why is there this huge lag we see in innovation when it comes to payments like these?
No, no, great question, right? So, if you look at Asian countries or Europe, for instance, they're always leading in almost all of the new technologies across industries, not just, BFSI, but specifically in the US, to your question, for whatever reason, BFSI is heavily regulated. And, if you screw up, you are going to be in the Wall Street Journal, and you're going to pay hefty fine, right? And you talked about the evolution, you talked about Zelle as well. So though Zelle was formed as a consortium of probably 6 or 7 largest banks in the US, it had a lot of bad press recently, right? Because of the fraud, even with the peer-to-peer payments. So they all are very cautious to see when they have to put a new thing out into the market, to see whether the adoption is there, and then the investment is there, and then go. So it will happen. Even QR code payment, right? So I use that always in Walmart. Walmart offers QR code payment. So if you're using your mobile app, which everybody does, almost probably 18 hours a day, right? We are continuously on the phone. So I use the Walmart example because when I go to Walmart, I use the Walmart app to find items, in whichever aisle, right? So the Walmart app gives you virtual directions, the store map. So, you're anyway having your phone, and when you're ready to check out, you can use or scan the QR code. It automatically takes the money from whatever payment methods that you have in your account. So it is there, but for all of the retailers to adopt to all of the new technology, it's going to take a little bit of time, right? And we didn't even talk about BNPL. I know probably sometime later during this conversation we can talk about buy now pay later, which was something that got introduced way back when, but COVID also accelerated a lot of that. Because of the e-commerce boom that we saw during COVID, everything is online. All of the online stores, they had peaked in terms of volume and sales. And the buy now pay later payment method was very convenient, and everybody latched on to that. Everybody is like their own format of 4 payments, and some of the banks, they went to 12 payments or even 24 payments, right? So um, short answer to your question, yes, it is coming, but we are always laggards in this space, specifically when it comes to US, because of all of the regulatory pressures. I hope that answers, Abhijit.
Thank you.
Absolutely. Thank you.
Thanks, Brad.
No, there's no doubt it's been a journey. I too remember the days of the carbon copies, especially when the point of sale system went down and you needed to scramble to get copies of the credit cards and then go back and enter those in later. So thank you for that. Let's
If
maybe,
I tell that to my son, he's like, "Hey, Dad, you're way too old."
no doubt. So let's maybe continue on the future and talk AI, generative AI. Obviously, that's always a big topic of discussion. Savdeep and Atraj, maybe I'll ask you guys, and obviously the larger panel to chime in here because I'm sure everyone's got a point of view. But Savdeep, if we started with you, how are you seeing, or how is embedded fintech, the embedded fintech apartment market related to generative AI? What are we seeing there? What are they doing there? What are some of the opportunities? How does it present itself? Let's maybe spend a little bit of time in that space, in that area as well.
Thank you, Brett. Hey everyone, this is Savdeep Das. I'm in Fiserv. I'm a senior director of product, and I run a division that's called the Embedded Fintech. Now, thanks for the question, Brett. And I heard how the conversation started around Abhijit talking about the digital transformation, speed to market, and now we gradually went to security, compliance, data integration, the cost around it, and we went into a conversation with Brian and then Natarajan and Richard around mobile payments, security, authentication, KYC. If we see the trend, right, if we see in all of these discussions, the transformations, the journeys that we are talking about, if we go focus in the industry of the financial services, we are practically talking about open finance. All of these transformations is evolving based on the open finance needs. And when I say open finance, it is what open banking wants to be when it matures, right? A lot has been written about open banking and the ability for consumers to fully own and securely share their banking data. Unfortunately, most open banking systems are mostly either an aggregation or a payment-centric system that collects this data, regardless whether the consumer or the bank is aware. Now, open finance, however, should explicitly leverage your financial data securely with your permission for customer-centric digital banking experiences, right? It is also a decidedly customer-centric worldview right now. Consumer demand for products and innovation is fueled by their own financial data, whether they know it or not. It's what drives open finance. Now, when we have spoken about this, there are a few things that's coming up. Of course, when you talk of AI or Gen AI, it almost seems like an overnight success, but it's not, right? It's a 70 years in the making with overnight success. Because people knew how easy it is to integrate some of these philosophies into their day-to-day businesses. So where I would want this discussion, or where our minds are right now is, with all these changing or evolving market trend, technology trend, and what industry wants, or what industry wants is driven by what customers want, how do businesses stay relevant or stay scalable? I think Abhijit brought out a point about during all these transformations, during all these collaborations, obviously no one person or entity can achieve all. So how do we achieve that? It's through partnership, third-party integrations, or digital partnership, fintech partnership. Where we are going as an organization, and where my thoughts are, and things that we are trying to solve for, the questions that we are trying to solve for is, how do you make these possible? How do you make your business relevant 10 years from now? Question number one, authentication. Banks, fintechs in an open finance ecosystem, when they work together, how do you know who is requesting what? There's a lot in the industry. I'm just going to throw out some keywords here. There's something called a proof of possession during authentication, during your API calls. Are we doing that? That's one emerging solution. Partnership. How capable are we to give access to our different systems to different third party, four party partnership arrangements? There are system integrators who banks bring in. There are fintechs that banks want to work with. How do you make that ecosystem such that they are going to market in the speed that's demanding from the customer and the industry? These are some of the questions and things that we are trying to solve for, Brett. And how does embedded fintech particularly impact customer behavior and expectations in terms of the payment experiences? It significantly influences consumer behavior by simplifying and streamlining payment experiences by these partnerships that we are talking about. Because as users become accustomed to making payments within their favorite apps and platforms, their expectations shift towards frictionless and secure transactions. And this phenomenon challenges the traditional financial institutions to innovate and meet these expectations. And additionally, embedded fintech enhances financial literacy and inclusion, bringing financial services directly to the consumer's life in a user-friendly manner. And that's what all these transformations are about. And as we go through that, as we mature through that, right now banks are regulated, fintechs are not. But now, at helm of this, there's government updates coming out of the Washington D.C., where there's draft in progress regulations that's going to regulate the fintechs and these partnership models. So that's where the business and the entire industry is emerging towards, and those are some of the questions that we need to solve now to stay relevant.
So I agree with everything you said, but I have a question. Maybe I'll digress a little. Do you think AI is overrated? As you said, right? We've been
It gets
seeing
talked
this.
about a lot.
We've been seeing, people call this AI, and I spend a decade in the credit card side of the business, right? They talk about all of these new things AI is done, but the reality is modeling has been done forever. As long as the industry's been around. Yeah, the modeling was rules based, there was a gradient boosting model, propensity, but they've been doing this forever. Right now with chat GPT, suddenly, whenever I look at trends in the industry, I look at how's private equity reacting to it. Suddenly now with AI, the buzzword investment in AI has like skyrocketed and everything else has fallen down. But is it really overrated? This has been there forever.
So AI is not overrated, Abhijit, but you're right. AI in some shape or form has always been there. With the evolution of open AI and the chat GPT boom that just saw everyone talking about AI, drives the fact that people are now thinking about different solutions or use cases, and not just that's restricted to fraud and intelligent underwriting. Businesses, banks, and organizations have been using AI in fraud, in underwriting, and a lot of other use cases that already existed. There was AI algorithms written to detect fraud. Where we are heading now is, and why I say it's not overrated, is because at least it opens up the entire thought process around, okay, I can experiment more. It opens up people that, okay, if AI is the buzzword, what else can I do in my business to integrate AI solutions to cater to a larger segment by reducing cost? I remember you mentioning cost, while evolving and transforming your business and your overall company's business model. I think that's where it's headed right now, where everyone with the open AI concepts and the evolving AI use cases, they're interested in learning and experimenting those use cases to define where else they can implement the AI experiences in their business model and their use cases, so they can solve those problems without accumulating cost.
Great response, Avdeet. I'll tell you, there are so many things you could do with AI, but what I have done, and a very simple example is, we all have spent many, many hours building decks. Now I use a generative AI website to build decks, which is so easy to do, and the decks come out looking great.
Yep. Um,
That's
and
great.
so agree to it.
Yeah, I'm going to need that website because I spend a lot of time doing those decks myself. I
You
did
got it,
I did
mister.
just want to I did just want to say so AI in financial crimes. Let's say financial crimes is I describe as AML and fraud, right? So fraud has had that use case forever with AI, right? How do you find as much fraud as you can, uh, and do it as fast as you can and reduce the false positives so you can work on those alerts that aren't holding up, that are holding up payments and creating customer friction. But AML, right, the transaction monitoring side, I think it's been slower to adopt because it's just highly regulated. And so I've seen AI, yes, it's used in fraud and they're very comfortable. I've seen less adoption on the AML transaction monitoring side. So I think fintechs are kind of more unique because now they have a way to do both fraud and AML in a single place oftentimes. So that's an important distinction. And if you do look at regulations and follow the regulations in 2018, the regulators released a report saying you can take new analytical approaches to solving some of the challenges with traditional rules-based AML systems. So I would also point to the regulators have publicly said they're more comfortable, at least as far as the banks go, for adopting some of this AI-based technology in money laundering, transaction monitoring.
No, absolutely. Thanks for that, Richard. And I'd like to kind of maybe stay there with security and fraud detection, and maybe Natraj, maybe get your point of view as well on kind of how AI is enhancing security and fraud, specifically in payment processing.
Yeah, so I know, AI is an interesting topic, right? So like what Abhijit was talking about, if it is used properly and for the proper use cases, then, and with guardrails around it, right? Because if you guys recall, Microsoft actually released AI based chatbot in 2016 in Twitter, and I think within 24 hours of it learning with what others are interacting with it, it started giving out racist remarks. It went rogue, and then Microsoft had to actually shut down in 2016. But now I think since then AI has come leaps and bounds from there, right? If you recall, I think OpenAI had the most hits when they released, and everybody wanted to try. And I think in the beginning, everybody saw great results. And then over a period of time, they saw that, okay, the response is not adequate. So it is still, in its infancy, I would say. And to Abhijit's point, um, not all problem can be solved by AI, right? So you have to use it for specific, use cases. And you should also have checks and balances. Now, coming to, security and fraud detection in payment processing, with the new models that we are able to generate and capture with AI, and the vast amount of data that we can process, that is where it is going to help with security and identifying and capturing fraud sooner than what the traditional models have been able to do, right? Because to capture fraudulent transactions, you need to see the pattern, whether the consumer usually buys that product, or is he in this location, or is he traveling, right? Or is somebody using or mimicking this particular payment or card or transaction, right? So that is when I think, my view, again, like I said, it's still in infancy. AI is able to crunch a lot of data in a very short amount of time, and then helps prevent fraud faster than the current models that we have. And it also helps with the KYC. I know, I think, Brian and Richard talked about earlier. KYC is an area where, again, AI is able to onboard customers and then also do periodic KYC checks, right? Automatically, to see if things have changed, to update and keep the customer information current, which is actually a key piece for identifying fraudulent transactions. And there are also prototypes or applications that we are trying to do based on blockchain to see how we can do KYC and AML and fraud detection using blockchain, so the data or the chain, is preserved, and it can be reused by multiple parties in the ecosystem rather than every division in a large institution or multiple banks trying to do their own KYC or AML. If we, almost like for breadfish, if we create AML KYC data repository and you give permission to your financial institutions or any other institution who needs, your information, then they can all see from the same single source of truth, and they can only add if things change to the blockchain, right? So that's one of the key rules in terms of preserving the history. So that is another area where, with the computing power, new model, and combination of technology, I think, the security and fraud detection can become better.
I completely agree, and I think when that example about the Twitter bot, right, that was you know was saying things it shouldn't have been saying, it's because people were feeding it bad information. So validated data, right? Like one of the things at Moody's we do really well is we have data on sanctions hits, we have data on PEPs, we have data on people convicted for different crimes. All that can be brought together in what's called our grid database to be used to help feed those models. And I do see that validated data source for Moody's Analytics as a key part to any fraud detection strategy. It's not going to do anything on the transactions, but it can certainly help understand who the customer is and maybe what risks they might have that could heighten that transactional score based on the model. So I think that's absolutely critical.
I'd like to punctuate what you're saying there, Richard. Points for the reference to the Microsoft Tay experience. Totally impressed that somebody brought that up in this meeting. But that punctuates the point you're making here, Richard, which is that Tay failed because the model was trained based on crowdsourced tweets from internet people. And it's the data sources that we use to train that we have to be super careful about. I think AI is wonderful in developing patterns. I think generative AI is really cool, but the integrity, the quality of the source of data that we use to train from can't be overstated. I do want to point out, I really distinguish between AI and generative AI, and I think generative AI is actually very innovatively being used by attackers in business email compromise, where they can insert into the middle of a discussion between significant people, reference what's been going on, and then lead people down other paths in a crazy convincing way. Generative AI is being used very, very well by fraudsters right now. But when we talk about traditional AI and the ability to find patterns, we believe AI is a key part of what we do in being able to identify patterns. And then once the pattern is identified through AI, we go to kind of less sexy, less trendy ways of formalizing and institutionalizing how we use that pattern. But AI is how we find and get new insights, and it's super useful for us.
Yeah, and in a lot of use cases, right? So AI is used to counter AI, right? Not related to the payments or the banking experience, but a lot of students, they actually use AI to do their homework or assignments, and then there are equivalent AI based tools that they do to check whether this was even generated by AI, right? So for the right use case, when used in the right way, AI can be actually powerful and useful.
Yeah, the first time I got ChatGPT, I typed in, write a convincing email that I'm a prince from Nigeria, right? And I have this big payment. And it actually said, no, it looks like a scam. So I was impressed that it at least identified that, but obviously you can tweak it. So, and that's exactly what we've seen.
Brian, but I'd like to echo, right? There are so many good use cases. I was recently introduced to a great use case by a young intern of mine who goes to college. And you guys would remember back in the day, there were these recorders, the small pen shaped recorder that you can take to a class and it could record what a professor is saying. But now that industry has gone up leaps and bounds. What kids nowadays do is they take that recorder to class, it records it, it summarizes what the professor's saying, and it emails you back in a summary, highlights all the vital points from that class that you need to remember. Fantastic. takes away the note-taking part of your job then. And very, very impressive, something. And something to look forward to as we see these new innovations coming out from AI.
No, this has been great. And I, as we got into this part of the discussion, I figured this would kind of take on a life of its own. So hopefully the audience is enjoying this as much as we have, as we've been going back and forth here. I do see some questions coming in from the audience, so I'd like to get to some of those as well. Maybe we shift gears a little bit towards digital currencies, and I see Ryan's submitted a question here, and I know we wanted to kind of touch on that as well. So I'll kind of open this up to the group as we get into digital currencies and crypto and blockchain and those kinds of things, and what we're seeing and what's being disruptive or evolutional, et cetera. But I'll just kind of quickly go to Ryan's question here around the developments and transformation and what we anticipate from digital currencies, of course, over the next 3 years. How do we foresee these changes impacting the broader financial landscape, regulatory, et cetera? Does anyone kind of want to take a first stab at that?
Yeah, I can go first. Right.
Okay.
So I think we'll have to split the cryptocurrencies and the blockchain, right? So they are related, but the purpose and the use for them, are different. So if you take just blockchain, the distributed ledger technology, there are a lot of use cases for that. You can use it for recon, and I just mentioned earlier, it can use to track data from AML, KYC, or for anything that you don't want the data to be changed, right? You want immutable data, then blockchain use cases are fantastic. But then if you layer, say, the cryptocurrencies or digital currencies on top, that's when I think they both get muddied, and blockchain also gets a apparently bad reputation. And cryptocurrencies has been going up and down depending on what's happening in the current market conditions, right? So you've seen FTX, BlockFi, Three Arrows Capital, Voyage, and a lot of those things are also influencing one way or the other. And the other factor is whether digital currencies or cryptocurrencies are an asset or not, right? So that is what I think SEC is trying to establish. We don't have a policy here in the US, and I know Saudi mentioned that Washington is working on policies or framework. So without that clarity from the regulators, it is going to be a challenge for people to see how they can really trust or adopt cryptocurrencies, right? For example, SEC is, I think now suing Binance, Coinbase, and other providers on specific assets to say whether, that is considered a security or not. Ripple and SEC have been at it for, a couple of years now. And then some of the financial institutions, they are also allowing, even in their 401k portfolio, for users or consumers to actually have a digital currency in their portfolio as asset, like Bitcoin, right, in one of the funds. So they are trying to apply for ETF approval that has cryptocurrency component. So if you were to ask me in the 3 years period, it depends on what is the regulation, specifically say for US, because every geo has their own set of regulations. Europe and Asia, Europe probably not so liberal, but Asia may be easy to adapt. So it depends on the geo and how specifically in the US SEC is going to regulate these cryptocurrencies. But if you leave the cryptocurrencies aside, the blockchain concept itself is actually useful for anything and everything where you have to preserve the data. And to top it all off, it also depends on some of the celebrities and the influencers that we have. For example, say if Elon Musk comes and talks something about Dogecoin or something else, then obviously there is a flare up in that particular cryptocurrency or digital currency, and then it goes back. And also some of the countries themselves are trying to do the stable coin, right? So depending on how that goes, the adoption for cryptocurrencies will change. It's not going to go away, but I think people are very careful in approaching this to see whether they want to invest in cryptocurrencies. I'll pause here and see if anybody else wants to.
Yeah, I think for me, the governments have so much incentive to implement digital currencies, so central bank digital currencies, that they're going to not have to print money and stamp coins and distribute them and destroy them and all of those expenses. And they're going to be able to say, oh, we can do so much better at stamping out funding for terrorism and bad things. I think governments are going to have a ton of incentive to go digital on their end. And my crystal ball doesn't tell me if that's going to be done within 3 years. I don't know, but it kind of seems like it might be the right time frame here. I think governments are beginning to experiment more with it. But as central bank digital currencies become more common, I believe that will actually create more momentum towards alternate digital currencies, because people are going to, basically the central bank digital currency will help on-ramp people into those environments, and then they're going to get there and they're going to find they have other options that are better and more interesting. And this whole payment app world that we're built around, this conversation is built around, will, I think, be enhanced when the governments take that step and then open the door and provide options for people to do more.
No, absolutely. We've covered a lot there, right? And talked about kind of where things are going, some of the digital currency pieces as well. Richard, maybe where we can shift a little bit based on that is more around the sanctions and sanction screening and the increase of that, and the focus of ensuring payments are not going to sanctioned entities or regions, and maybe get a little bit of a perspective on that side of things. You can kind of spend some time there for us.
Sure. So in payments, right, you don't want to be sending money to a sanctioned individual. Certainly don't want to be onboarding a sanctioned individual entity. Could be a company as well. So, we see the trend of understanding ownership, right, of different companies that you might be working with. That could be on the vendor side, your own third-party side. It could also be, are these folks coming onto your platform? If you have a fintech that you can access your information from sanctioned countries like Iran, there are fines that have occurred as a result, right, of being able to, to download certain programs in sanctioned countries. So there's a lot of sanctions risk. It's really important to understand that ahead of time, as you build programs. I think when I think of sanctions as well, it is a natural conversation for cryptocurrency that we just had, where, is someone using cryptocurrency to bypass sanctions? So that's where some of the negative, I think reputation can come from. So that would be my view, is really understanding sanctions. And I will continue to say, check the different websites like OFAC and kind of learn from why companies have been fined. So if you see a company that's similar to your own, as you're building out your fintech or as your fintech matures, make sure you understand that risk, because some of them are fairly easy to really understand and control for.
Thank you for that, Richard. Anyone have anything else to add to that, or want to?
I just saw, I had a chance to view a wonderful interview with, I think her name is Christina Chi, the CEO of the quant fund Dome Yard, and not knowing the identity of some of her investors who were of a dubious background and potentially had ties to stuff that the governments don't want to allow participate in our financial systems, and seeing her comments about being hauled in by the FBI, and not just for an hour or two, and them trying to understand and really work her over, it put kind of the fear in me. I do not want to be in those shoes. I want to know my customer. I want to know my investors. I do not want to have that problem. And I was grateful that she was humble enough to make that experience visible so that others could learn from her experience.
Absolutely. Thank you, Brian. Maybe let's shift towards the future a little bit, and consumer behavior and expectations, and Savdeep, if I can go to you, if we can talk a little bit about embedded fintech and how it's shaping up the future of payments. What impact to consumer behavior are we seeing, and expectations payment experiences, etc. If you could maybe give us some insight on that, that'd be great.
Absolutely. Thanks, Brad. So, with all these industry hot topics around AI or with crypto, I see there was a question around network tokenization. Where where we are going into the future right now, and that future is eventually right now. So what we have been talking about for last 5 years is practically now, and that now is, for example, a lot of these ecosystem needs openness, like ABA summons you if you as an industry leader provider, be it a fintech or a bank, if you're not open, if your ecosystem is not open enough, which adheres to the open banking ecosystem, which is why a lot of organizations, including us, have been kind of sprinting towards that. Right now, we can say that future, why I say is now, because OpenAI requires security of who's using your APIs. We have been a lot of our partners and integrations were reliant on the SSL certification model, where a certificate is given to you, and you just your app kind of uses this SSL authentication, and then that certificate expires some fine day, and then everything goes down. With these fast emerging solutions being deployed to customers and the experiences that the businesses bring to their customers, certain things that we are also doing, like I was talking about the proof of possession, where you ask, it's called a Depop concept, right? Where you have a public key, you have a private key. You need both to authenticate your systems when you're calling your APIs be it from your own apps, or you are integrating with a system integrator or a third-party fintech who's solving things for you. These are some of the things, and keeping in mind the audience that's in this call, I think those are some of the things, little things, but that solve the go-to market and the integration problems of all these fantastic solutions, be it crypto, be it AI, whatever it is that your businesses are bringing on to the face of the market. We need to solve that go-to-market problem, because creating a product is one thing, and the ability to take that product for users and your partners to integrate and drive value out of it is another story to it. So right now, my embedded fintech group within Fiserv, we are kind of solving those problems. I know this forum is not enough to discuss all of those, but happy to answer questions if you have to reach out to me. And some of the solutions, like today, if you go to Banking Hub in Fiserv, all of those open APIs that connect to the core systems, we are implementing all of those Depop concepts, so that we are ready for that modern concept. So those are few insights that I can share, and there's more that's happening, but all of this is driving those technology transformation.
Okay, great. Thank you for that. Abhijit, maybe if I can jump over to you and maybe just have you expand that too. What impact are you seeing with the explosion of embedded fintech and kind of the evolution of payments over the past few years?
The past few years I'm going to talk about the last 10 years in payment services has seen so much growth that they've never seen in the past 40 years before that. And that's how different the last 10 years is. There are terms, for example, Natarajan spoke about BNPL. There is another term that is thrown out where we play an active part as banking as a service. Who knew what BaaS was before? Nobody. But providing embedded financial solutions that is able to fuel customer engagement, value, and loyalty, and allows non-financial companies to deepen their customer relationships is fantastic. Right? If you break it down, right, what is BaaS? Any business or any company wants to give a banking product to their customers. They partner with a BaaS solution provider. That BaaS solution provider may or may not be a bank. In this case, we are a bank. We are able to provide these services. How do we provide them? We have cloud native applications. We create APIs, and those APIs are used by these providers. Either we build them or they build it, and they're able to create a financial experience around it, either within their own application or interface, or we create something for them. Now, this is a huge shift from how banking was always done. It was always controlled by banks for the longest time. But now, suddenly, with this new emergence, you see every other business is a bank. If you think about it, let's talk about Amazon. Amazon is one of the largest retail providers in North America. Do you know how many payment products Amazon has? You can split a payment, you can have a credit card, a debit card. There are payment solutions for their sellers, for their distributors, everything under one umbrella because of these embedded finance solutions. Look on the other side. You have our partner, Apple. We partner with both Amazon and Apple. But Apple has a credit card, Apple has a payments wallet. You're able to move money. Everything that a bank does, these providers are able to do because of these embedded solutions. This is a huge shift in the industry. Now, if you think about it from a customer empowerment view, customers suddenly, for the longest time, they were, for example, Amazon. Customers love Amazon. You see the number of customers they have. They know their user flow, UX flow, right? They are used to it, and now they don't have to move away from it just to do banking or just to buy and sell something. It's all part of the same ecosystem. That is the power of embedded finance, and it's brought out in the forefront with all these advancement in technologies where we are able to allow a business to offer banking solutions to their partners, to their customers, and make it seamless and easier for a customer. And the advantage we see is, back in the day when this domain was untapped, we started partnering with we started with Uber. We allowed Uber drivers to get paid instantly. That was powered by Green Dot. We had a rapid disbursement solution. We also created a bank account for them, so customers, as soon as they complete their drive, they can get paid. Today, that concept has been taken on and has been really expanded, and now there are so many payment processors, there are so many BaaS providers, there are so many bin sponsors, so many banks that specialize in this. And that's where Saudi, I see he's left, but he was opining on it. There is so much more new regulation. Who owns the customer? Is it the is business, or is it the bank? Because they do the KYC, and Richard, I know, is very familiar with this. They do the KYC, but at the end of the day, if I'm a customer, I interact with Amazon, I interact with Apple, I don't interact with the bank behind the scenes. So it's a very good question, but all of this is because of the advancements we have seen in embedded finance, and this is just the tip of the iceberg. We are really maturing into this space. I do foresee a lot of regulations coming in, but I also see a lot of advancements. BNPL is a classic example that Natarajan brought. BNPL has been around forever. If you went in the 80s and 90s, all credit card companies were offering it. You want to take a payment and pay over some time, sure, all of those things were around. What they've done is they've taken one area and created a niche out of it. What they've done is they've completely separated it out. Layaways, they've been there forever. They've separated it out, and they've created modern new UX, great marketing campaigns, and they've made a complete industry out of it, all because of how payment services has evolved in the last decade. You
And
have a question?
the
Yeah.
result of that has been that the financial world, if I describe it as a tent, that tent has expanded.
Yes.
It's not, they haven't been competing with traditional finance. They've actually been growing that market and our ability to reach people and who we can treat as customers. These changes aren't just changing the way that traditional financial organizations are doing business. It's actually bringing people in who were previously cut out. That's a big deal to me. We're expanding the tent. More people are able to do more things and securely. It's a really cool aspect of what you're describing.
At the end of the day, if you think about it, who's gaining from all of these things? Customers.
Customer. Yeah.
They have really gained from this, whereas a traditional big bank may not have paid so much attention. They cared about how do we service the customers. They cared about how do we make sure we are regulated, we are able to move money and all. They may not have as much care about how does the mobile interaction look like, how does the UX look like. But all of these fintech companies, all of these businesses, that is the first strategy. Everything else comes later. So I think they've solved part of that puzzle, and at the end of the day, the customer is able to leverage and gain with all of these things.
And
Absolutely.
Abjit, you had said layaway. I laugh because that's exactly what I was thinking. I'm like, that was layaway was the model, right? Like
Yeah.
talking about credit card, all the old slips. Like I remember those being in stores when I was a kid, in the layaway
Yes.
department. And here they are now. They're cool and trendy, but it's because it's digital and it's a different concept, but it's the same idea.
It's funny. Sears had layaway before Sears went out of fashion.
We're all telling our age here on this.
Yeah.
This,
We're old.
no, this has been great. I know we're getting close to our end of time today, and I want to be sensitive to everyone's time, both the panelists and the attendees. Maybe let's just kind of wrap things up with any last thoughts from the group, and I'll just let you guys kind of go as you see fit.
I just leave with these parting words. Evolution is important, and to embrace evolution is even more important. To be resistant to new things, be it in payment services, technology, artificial intelligence, you take your pick. It's very, very important to embrace this and at the same time understand the pros and cons of these, because not everything is good that you're told of.
And we were talking about layaway and BNPL, right? So I completely agree with what Richard was saying. It was not fancy or cool when it has been there for decades, but with the modern technology, mobile, the ease of use, everybody started using BNPL. But the flip side, from a consumer standpoint, they're just spending the money that they don't have. But when it times to repayment, that is when people realize that, oh, they are in so much debt, right? So that's why now banks are starting to realize, and if you look at the personal credit levels, they are through the roof. So at least all of the financial institutions, payment companies, banks, they all have that moral responsibility, not just to put a cool tech out there, but also to educate people and tell them everything about the product or the services, so that general education awareness is imparted to the consumer. So it protects the consumer as well as the banks themselves, right? Otherwise, banks are not going to get their money back. So that is something that I want to leave my thoughts here, to say all of the technology, everything is cool, but we just have to make sure that the customers understand and that awareness is imparted for all the new products and services.
Yeah, I think that's great. My final thoughts would be, as you identify your needs in fintech, make sure you're thinking about regulations specific to money laundering and also how your platform could be misused for fraud. And if you get those two things right early on, I think it'll just make it a lot easier for you in the long run. Because one thing you know about fraudsters is they will always figure out a way to exploit new technology. I mean, even when we were talking about the biometric, components, I can absolutely see people, making some sort of copy, right, of your hand, right, in some sort of, futuristic way to take advantage of that. And we've already seen that with fingerprints, right? With a high-res camera, you can misuse someone's fingerprints. So it's wild what people will come up with to abuse some of the programs that you're creating and doing your best to create. So that would be my parting advice.
My closing comment, and I wish I had spent more time preparing the thoughts. So I'm going to throw a half-baked imagery at you. It's some half-baked images. In my mind, I'm imagining that the public, our customers, are like this hot frying pan, and we're coming in with, fintechs are coming in with these ideas of, can we do this? Can we do that? And each of those ideas is like a seed that you throw on that frying pan. And sometimes they just pop and explode like popcorn and they grow into amazing things. And sometimes they're those little burnt husks that you discard into the pail. But what I love about what I'm seeing in our industry right now, particularly in the payment space, is that we're willing to throw more and more seeds on that pan to see what comes out of it. And we're grabbing what's good, and those changes, those new ideas that we allow to grow and explode and become these bigger and better things, are what's expanding the market. They're what's making more things available to our customers. And they're also, if we do it right, we're able to do it in a way that's more secure and has less friction and is easy. We're doing new cool things, and we're able to do them in ways that can be more secure and easier for our customers.
Absolutely. No, thank you for that. No, and thank you, panelists, again for today's discussion and time. Great insights, great perspective. Appreciate the collaboration. And then I'll turn it back over to you to wrap things up.
Thank you, Brett, and thank you, everyone, for your great thoughts. So let me wrap it up so that audience can get the exact things out of this today's webinar. So first of all, we extend our gratitude to all our community partners, the esteemed speakers, and all the attendees who participated in this forum, which provided a platform for knowledge enrichment. As our panel speakers were exceptional, and we appreciate their willingness to come together and share their valuable insights. Further, if anyone feel you missed something and wish to look back at the session, let me inform you that today's session was broadcasted on the YouTube page of our company. So you all can go and see the recording anytime. And if you are looking out for recent technological updates and advancements, log on to our website and social media channels. We'll be sharing lots of knowledge sharing topics, details, announcement of the next events, and much more, which will help you register and attain the same. Before we close, we would like to thank InfoVision, which is our knowledge and innovation partner, and Digit7, which is our technology partner. To understand more in depth and connect with them, all of you can go through their website, which is infovision.com, and stay abreast with the technological advancements. Further, there are lots more in store for this year with a focus on different industries like banking, financial, insurance, telecom, high-tech, media, entertainment, retail, healthcare, supply chain, manufacturing, and so on. So I request all of you to keep connected with us and enjoy the learning. It was a pleasure bringing this session to you, and we hope that you enjoyed it as much as we did. We look forward to having more sessions with you. Take care and have a great day and week ahead, guys. Thank you. Thanks a lot, everyone.
Thanks, Nitin. Thanks,
Thank you.
everyone.
Thanks, everyone. Have a great day.
Have a great day.